So Shane, how does the Omicron variant now colour these expectations for the data points that we're already watching very keenly in the week ahead?
Look, I think it adds a high degree of uncertainty. Obviously, a new variant, and this one is one of concern, sort of throws a lot of uncertainty into the mix. We were looking, I think, on track for a pretty good recovery or continued strong growth going into next year. This raises a question mark about that. But by the same token, it is early days yet. Markets have reacted very quickly, perhaps quicker than they did in the case of the Delta variant. And that's partly because, I guess, the information came out on this new variant very quickly. But what we do know doesn't necessarily derail things. If the variant is more transmissible, but the symptoms are a lot milder and not so deadly, that could actually be good news. It could be a sign that the virus is mutating in a way that makes it less harmful, like presumably cold and flu did. So it could go down a path which isn't so negative, and as a result, this could be a buying opportunity. But at this stage yet, it's still way too early. And of course, that's why you've seen that knee-jerk sell-off reaction in financial markets. And of course, it's going to be a couple of weeks before we get a clear idea regarding all of this, and in terms of how effective the vaccines remain.
It will be a while before we get answers to some of those questions, just on account of waiting for the data, right? But in any case, is this really a pretty good excuse for some of the selling, given the rich valuations and pricing that we see and the existing risk of inflation, of tighter monetary policy?
That's true. I mean, don't forget, the US share market, the S&P 500, was up 25% year to date. Really big gains there. Yes, we've had a few pullbacks along the way, but they've all been pretty mild. So to some degree, the market was vulnerable to a correction. I thought we were going to get a deeper one back in September when the market started to come down. It turned out not to be the case. The market just took the lead from strong profits and still low interest rates and powered higher. But yes, the market was vulnerable. Now, going forward, of course, we do come into a seasonally stronger period as we go into December, January. So I suspect if this is just a correction, it turns out okay with Omicron. It's not so deadly. The vaccines still work in heading off serious illness. Then you could see a good rebound into year end, but it could still go lower in the interim over the next couple of weeks.
Well, Shane, in the U.S., a really stunning bond rally when you see the 10-year note drop 16 basis points in a day. However, Raphael Bostic, president of the Atlanta Fed, who was with us just about a week ago saying he was open to that faster taper, said, guess what? He's still open to a faster taper in an interview with Fox News on Friday. Could this be a bit of a head fake then for bond bulls if suddenly the Fed doesn't pull back?
That's right. It could well be. If the Fed doesn't pull back, then I suspect, though, the Fed, if it doesn't pull back, it would be against a backdrop where Omicron proves not to be a serious threat. If, alternatively, Omicron proves to be a serious threat, then I think the Fed will have to pull back. So at this stage, what I think Bostic is saying is that, we don't know, but, Delta didn't derail things dramatically, didn't stop the inflation problems. So if that's the case with Omicron, then they continue down this path of potentially faster taper. So it's a little bit confusing, but it could well be a head fake. That rally we saw on bonds on Friday may just be a head fake, and the trend is still up in bond yields. And I suspect my own view is that that's probably more likely to be the case than the alternative, where bonds have just started a massive decline in yield.
Well, let's just take a quick listen to what Raphael Bostic had to say so we can kind of set our watchers, our viewers up for the various questions we'll be watching today, because this was pretty significant. He knew what was going on, and he still had this to say.
I'm very open to accelerating the pace of our slowdown in purchases. For me, early second quarter, late first quarter of 2022 are all in play as reasonable alternatives for when we might stop our purchases if the economy's momentum continues how it has over the last several months.
Okay, so let's say this, Shane. Let's say that the Federal Reserve, watches the Omicron. It's not so bad. It does gradually start moving into its taper faster or slower, and stocks continue their rally. You said you see buying opportunities potentially. If you're buying, what is it?
Well, you'd be selling all the ones that sold off on Friday, the reopening stocks, the travel and leisure stocks in particular. they would see a huge rebound out of this. And of course, you'd be selling the stay-at-home stocks, which rallied on Friday. So that's where you'd go. But basically, it's cyclicals you would favour. And of course, you still have an eye on the inflation threat, because the inflation threat won't have gone away. And you'd be favouring cyclicals that have potential to provide a hedge against higher inflation.
Shane, how much volume do you expect to see when it comes to, I guess, de-risking with these travel, leisure, reopening stocks? Have we gotten too far ahead of ourselves here?
Well, it's quite possible we have. We've seen very much a knee-jerk reaction. And it's interesting, we didn't see the same knee-jerk reaction in response to Delta and Alpha and Beta when they came along. Perhaps, I guess, investors have become a lot more sensitive lately to these things. And of course, the health authorities are acting a lot quicker. So we may be seeing an overreaction. It's too early to say that overreaction is over. It could go on for a while yet, but it is quite possible that markets have got ahead of themselves. You just got to allow that, vaccines like to mutate and they like to survive. If they mutate in a way that sees the vaccine kill everyone off, then the virus dies with it. But if the mutations are in a way which allow the virus to survive through time, then they have to be milder. So maybe that's what's happening here. But obviously, that view is not getting a lot of airplay at present. At the moment, it's a question of shoot first and ask questions later, and see if the good outcome turns out to be the case. But so there is potentially an opportunity there, but it's still a little bit too early to start buying for that opportunity, unless you want to just average in rather than trying to attempt to time the markets.